In the future, cash won't just disappear, it'll evolve. Imagine a world where the government can issue, track, and even control money with a few clicks. Well, that world is already here, and two Asian giants are leading the charge. Welcome to Mind Insight. Today we explore the clash of the titans, China's digital yuan versus India's digital rupee. Who's ahead? Who's catching up? And what does this battle mean for your wallet, your privacy, and the global economy? Stay tuned, this isn't just a financial story. It's a geopolitical revolution. Let's start at the root. A central bank digital currency, or CBDC, is government-issued money, but in digital form. Unlike Bitcoin or Ethereum, it's not decentralized or volatile. It's just like paper money but programmable, traceable, and centrally controlled. China launched the e-CNY in 2020. India followed with the e-Rupee in 2022. But the goals? Quite different. China is racing ahead for global dominance. India is carefully testing for inclusion, stability, and financial reach. The question is, who's getting it right? Now let's look at China. The e-CNY pilot is huge, spanning 25 cities and used across public transport, tax systems, healthcare, and even green rewards. As of June 2024, over 7 trillion yuan was transacted, up 4x from 2023. That's around $986 billion. 180 million wallets have been issued, but here's the catch. Despite this massive scale, the e-CNY still makes up only 0.16% of all cash in China's economy. Why? Because people still prefer Alipay and WeChat Pay. They are fast, private, and offer cashback and features CBDC lacks. India's digital rupee, E, may be smaller in scale, but it's growing rapidly. By March 2025, e-Rupee circulation hit 10.16 billion Indian rupees, that's $122 million, a 300% rise from last year. What makes India's case unique is inclusion. The RBI has tested offline payments in rural areas, programmable subsidies for farmers, and usage in low connectivity zones. Over 5 million people and 300,000 merchants use it already, across 26 cities and 16 banks. But UPI, with 83% share of all transactions, still dominates. Why switch if UPI is so seamless? Here's where it gets personal: privacy. Would you use money if the government could track every transaction? China promises partial anonymity with transaction limits. India is testing full privacy by allowing permanent transaction deletion. Still, people are skeptical. Surveillance fears loom large. That's why adoption isn't just about tech, it's about trust. Digital currency must feel like cash, free, safe, and untraceable, or it simply won't click with citizens. The People's Bank of China has one goal: globalize the yuan. They've built mBridge, a CBDC platform with Thailand, Hong Kong, and the UAE, to do direct cross-border trade and bypass SWIFT. Meanwhile, India's Reserve Bank is more conservative. Its goal is financial inclusion, stability, and interoperability with UPI. No rush to launch, no aggressive push. Instead, India is testing use cases like employee benefits, carbon credits, and even payments for landless farmers. Globally, the e-CNY is already used in energy deals, like Bangladesh paying Russia in yuan. It's part of China's de-dollarization plan. India? It's not keen on that. In October 2023, India rejected the yuan to pay for Russian oil. The digital rupee isn't aiming for global use, yet. India still believes in rupee-based trade and strong bilateral ties. The question is, will CBDCs shape the new world order? Within BRICS, there's a bigger plan brewing: a shared digital currency backed by gold or blockchain. At the 2024 Kazan summit, China and Russia pushed hard for it. But India? Again, skeptical. Why? Because any BRICS coin might lean too heavily on the yuan, threatening India's monetary sovereignty. India prefers to lead on its own terms, using rupees for trade, not multilateral tokens. So what's stopping full-scale rollout? In China, people love WeChat and Alipay. In India, UPI is too efficient to ignore. CBDCs must go beyond payment, they must offer real utility. Think, offline money, programmable funds, and anonymous donations. That's the next frontier, and both countries know it. So, who's ahead? China has the lead in volume and ambition, it's everywhere. India? Smaller in size, but smarter in design. Both are experimenting. Both are cautious. In the end, trust and transparency will determine the winner. And perhaps, The true winner isn't one country, it's the world, learning how to reshape money. As we head into 2025, one thing is clear: digital money is no longer the future, it's the present. China is experimenting boldly, using digital currency to reshape trade and policy. India is moving with caution, but with clarity, putting people and inclusion first. Whichever model wins, both nations are laying the foundation for how money will move, feel, and empower in the years ahead. This is not just a tech race, it's a values race. If you found value in today's breakdown, drop a like, share it forward, and don't forget to subscribe. Let us know in the comments, would you trust a digital rupee? Or would you rather stick with UPI? This is Mind Insight, decoding global trends, one story at a time.